Market recovers from day's low, but investors remain cautious on earnings uncertainty. Realty stocks lead the charge while mid-caps outperform today.
Justile gains on posting record margins while Angel One perks up as revenues per client rise, but TV18 slips as profits crimp on scale-up of new verticals and quick heel falls after sales dip in a seasonally strong quarter.
China reports growth of 4.5% in the first quarter of this year and ahead of the 4% expected, sparking a rally in oil and metals. Hopes of stimulus to revive the soft pockets of the economy also buoys the sentiment.
Tata Chemicals salts on a dip in soda ash prices, but Coca-Cola's investment in an associate boost. Jubilant Foodworks and hopes of divestment drive up BEML.
All right, so those were some of the visuals coming in from the launch of India's first Apple store this morning. Quite an electrifying atmosphere there. It's Nigel D'Souza and Nisha Poddar joining you on Business Lunch. So, Nigel, we totally missed out on this opening because we were working. Probably we'll catch up there. But some of our colleagues are right there to give us the updates. So, our colleagues have been at the store since morning. Let's first take it across to Manglam Malu. Manglam, what was the launch event like in BKC in Mumbai?
Well, it's a cultural moment for India, an Apple store opening out here. Every country remembers the first McDonald's store, the first Starbucks outlet, or the first Domino's Pizza outlet. An Apple store is another important global institution, the opening of which generates a lot of excitement. And excitement it was. We had thousands of people queuing up, some, as early as last evening, who camped all night to be among the first few people to enter the Mumbai Apple BKC store. And they were welcomed by none other than Tim Cook himself. Tim Cook, in, the previous conference call of Apple, has said that India is slowly becoming an important market for them. While in their overall scheme of things, India accounts for a little under 2% of revenues. But remember, reports suggest that last year the revenues from India for Apple grew by 50%. So, the growth runway that India offers is massive. And this in addition to the fact that a lot of the phones are now being produced and manufactured in India itself. A cultural moment. Everyone was excited. Everyone was dancing to the drums of the Pune Dhol, etc., right outside the BKC store here in Mumbai, which in its design, not very different from the global stores, but localized in a way that, the stones were procured from Jaipur, the ceiling was, made of timber procured from Delhi, and the music that played inside was of Indian taste as well. So it had a lot of color with the standard global great Apple experience taking place. Everyone extremely excited. Let's see what this does for Apple in India. Do their sales continue to grow at the manic pace that they are, especially in the premium end of things? Back to you.
Okay, all right, Manglam, thanks a lot for that. Well, Shubhani, over to you. What does the Apple experience feel like?
Early in the morning, there were dhols right before the store opening. A lot of energy, high-octane energy, in fact, as Tim Cook welcomed some of the first few customers. And then the Apple employees took the excitement to the next level. As the customers walked in, they were chanting BKC, BKC. And this store in itself is much different. So typically, globally, when you see or visit Apple stores, you get that standard white color. There is, of course, a hint of color. There is Hello Mumbai on the glass facade outside. Very, very Indian touch to the whole store. It's spacious. It's approximately 22,000 square feet store, and then you will get to experience a lot of things, lot of products placed on the table. Some of the colors which are not available at the Apple authorized resellers are available right here, including different kinds of straps for the Apple Watch, some some different colors for your iPhone. The latest yellow color on the iPhone also is on display over here. Customers are walking in. Many of them have queued up early in the morning. One of the first customers to make a purchase purchased an Apple AirPod at the store as soon as he walked in. So they are walking with a firm purpose on what is the purchase that they are going to make at this store, and many are going straight, experiencing the product. The employees over here are helping them make that purchase, and then they are going ahead and purchasing the product. Another thing about this store is that you can actually buy the product online and just come and pick up the product at the store, where you can actually unbox the product right inside the store. An Apple employee will help you probably set up the device for you. So all of this experience you will get after Apple has launched its retail store in India right here at Apple BKC.
All right, Shivani there giving us the on-ground excitement there. But Apple CEO Tim Cook is also scheduled to meet the Minister of State for IT, Rajiv Chandrasekhar, ahead of the Delhi store launch on the 20th of April. Now, the discussions are likely to focus on Apple's India plans. Tim Cook is likely to express confidence in India acting as a manufacturing design hub for Apple. Now, he is also likely to share commitment for further expansion of made-in-India Apple products. So why is Apple hot on India? Ashmit Kumar, my colleague, explains that to us. Ashmit.
Long flight, but by the look of things, Tim Cook is excited and charged ahead of India's retail store launch. This launch marks Apple's 25 years in India, but it India is a hugely exciting market and a focus area for the company. So let's take a look at what has inspired this focus on India by Tim Cook. Now, Apple began production, but all of that has changed. Apple's Taiwanese contract manufacturers, Wistron, Foxconn, dug in their heels for the long haul and are going full throttle. So why is Apple looking at India now? Well, Apple woke up to the heavy dependence on China with the COVID lockdowns that severely impacted production as well as exports. Moreover, tensions adding to the wars, a need was felt by the Cupertino-based company to make the supply chains more resilient. India, moreover, proved to be a strong performer with stable production despite COVID. And finally, the cherry on the cake was the PLI scheme. India, now the most populous country in the world, proved to be a large market. 2022 alone saw sales of 7 million units. But the larger story is that of India as a manufacturing and exports hub. India posted unprecedented growth, recording electronics exports of $10 billion in FY23. Of this export figure, Apple's exports alone accounted for nearly half of it. Apple exported over $5 billion worth of goods, tripling its exports from FY22. Apple has become the first company ever to record exports of $5 billion from India. In comparison, Samsung posted exports of $3.5 to $4 billion for the same fiscal. Now, inspired by these recent successes, Apple now plans to triple production in the next 2 years. In fact, a recent report by JP Morgan indicated that Apple wants to shift manufacturing of 25% of all Apple products to India by 2025. Now, this intent is reflected in contract manufacturers like Foxconn doubling down on their investments. Foxconn is planning to pump in $500 million. It is also planning to quadruple its workforce in just the next 2 years. So, for 2023, expect Apple and its contract manufacturers to 1. Expand facilities, scale up production, increase the workforce, and also develop design and innovation hubs here in the country. But Apple's journey may still see some challenges. For one, India is still heavily reliant on China for importing key components to assemble phones. Moreover, of the 120 suppliers to Apple, only 12 are currently manufacturing in the country. India will also have to face challenges from countries like Vietnam that offer lower duties to attract investments. Meanwhile, the value addition in India is currently restricted to about 14 to 20%. And finally, the delays in payout of PLI incentives to companies may cause some discomfort. Apple, for now, is betting big on India in the China Plus One strategy. But India will need to remain on its toes to continue to grow as a manufacturing and exports hub.
Well, that was all the action from India's first flagship Apple Store here in India. Well, up next, we'll shift focus back to the markets and the stocks that are moving in trade. You stay with us. Welcome back. You're tuned in to Business Lunch here on CNBC-TV18. Well, we've seen a good recovery from the markets, and the biggest positive really today has been the broader markets. So even though the Nifty is a little bit lower and trading in a bit of a range, there are plenty of winners in the broader markets, and one would like that, right? So you take a look at the mid-cap index, that's doing well, and we pointed this out at the start of April itself, that traditionally the broader markets have outperformed what the Nifty has done. And in this month, well, it's no different as well. So we've got 10 days to go for the end of this month. Let's see how things pan out. But I'm just looking at some notable gainers. The pharma pack has come back in style. So you have Divi's Laboratory from the Frontline Index. Well, that stock has moved to the high point of the day. But otherwise, from the broader markets as well, you have Lupin. The stock has underperformed, but that's popped up in trade. Loris Laboratories as well has done pretty well. And Bandhan Bank, one of the underperformers from the banking pack, well, that as well is moving higher and moving higher on very, very good volume. So just keep an eye out on that one as well.
Oh, that's right. So that's the market for you. And yes, tepid at the moment when we look at the frontline indices. But we are in the midst of earnings season, and Just Dial is really surging after reporting a strong quarter. Now, the management also believes that their margin will continue to expand going forward. Take a listen.
As we move forward into fiscal 24 and as our revenue converges with our collections for this year, this margin should sequentially keep on seeing an uptick, which is visible in last 2 to 3 quarters as well. So on a long-term basis, I think this business requires 6 to 7% of our top line to be spent on advertising. It could fluctuate a bit on a specific year basis. For coming year, I think anywhere around 35-40 crores definitely we would want to spend. And further increases could depend on how things are panning out. B2B segment revenues were about 26% of our overall revenues last year. And overall, in last 2 to 3 years, this particular segment has obviously outgrown the B2C side of revenues. And we expect such outperformance to keep continuing in coming years as well.
All right, let's move on then to our special segment, Quarter Se Quarter Tak. Sonal is here with us today to take us through the expectations from the oil and gas pack for the fourth quarter. Sonal?
Well, it is largely going to be a good quarter for the oil and gas sector due to better realizations, and also fundamentally, this quarter is supposed to be better. Remember, crude prices, they have declined sharply, around 19% on a YY basis, 8% sequentially to $81.2 a barrel. And on the other hand, Singapore GRMs, they have increased to levels of $8.2 per barrel versus 6.3 earlier. And this is something that will show in Reliance's earnings, which will see an improvement led by the O2C or oil to chemical segment and lower windfall taxes as well. Overall, this would lead to an EBITDA increase of 5% on a sequential basis and on a consolidated basis as well for the company. For oil marketing companies, lower crude and higher refining margins will definitely be a positive, but a bigger turnaround will come in from the marketing segment, and that is where improvement will be seen in both the segments and will lead to a 77% sequential surge in EBITDA and 3.3 times increase in PAT according to ICICI Securities. For upstream companies, even though crude prices, they have declined, realizations post-taxes have been around $72 to $76 a barrel, and gas realizations have been stable quarter on quarter, so this will see a set-off. Overall, high other income will aid earnings for oil producers this time around. City gas distribution companies will see a mixed bag where MGL will see the best performance. MGL took sharper price hikes versus IGL, and hence the EBITDA performance is expected to be better. Gujarat Gas will see a weak performance this time around, led by lower demand in the industrial segment. Nirmal Bang estimates that Gujarat Gas will see 26% decline in EBITDA YY. IGL will see a 12.5% increase, but the biggest rise will be 72% increase in MGL's EBITDA. Now for gas utilities, GAIL and GSPL will see a weak quarter due to supply shortages from Gazprom and also weak demand, while Petronet LNG will see better numbers. That is because of lower spot LNG prices. Leaving you now with the valuations, all producers are still seeing compressed valuations. So around 3 times is what is the number for ONGC. Reliance Industries is at 21.6 times. If we talk about BPCL and HPCL, BPCL still continues to trade at a premium. MGL, which is expected to do well, is the cheapest in the city gas distribution space at around 12.8 times, and the others are higher here.
All right, thanks Sonal for all those details. Now shifting focus to Avalon Technologies, which had a muted listing, and the IPO included an offer for sale for 545 crore rupees, and the company aims to use the proceeds for debt reduction and funding its working capital needs. Now, earlier today, we spoke to the company's management to discuss the growth outlook going ahead. Listen in to the management.
We're looking at it a lot more longer, three-year horizon. What we see immediately is that we will be growing faster than the industry. And since we're just listed, we cannot give the exact numbers out. Our anticipation is going to be faster than industry. We're seeing the orders come in from that. And we intend to keep our 51% and go larger. And the key goal was to give as much as possible as a percentage to the new stakeholders, and that's one of the reasons why the promoters reduced, and some of the other shareholders have reduced much more than what the promoters have done.
In terms of the IPO, and the primary purpose of the IPO is to make sure our growth is fully funded. You all know that the manufacturing sector and EMS is seeing a huge growth momentum because of the industry tailwinds as well. So the idea of the purpose of the IPO is to make sure the growth is fully funded. Bulk of the money will be going in debt reduction. We intend to maintain the working capital lines.
All right, debt reduction indeed, but Avalon Tech, well, subdued listing, one has to say, at the low point of the day with a cut of around 10%. Well, time to slip into a short break. When we return, credit card monthly spends for the month of March are the highest ever. A detailed analysis on the other side.
Welcome back. You're watching Business Lunch. Now, the month of March saw credit card spends hit the record levels. Abhishek Kothari, my colleague, has done a lot of analysis on that and standing by with all the details. Abhishek.
For March 2023, the credit card spends grew by 28.2% YOY and about 15.7% on a month-on-month basis to more than 1,35,000 crore. While monthly spends are the highest ever for the credit card sector, the credit card issuances also have remained healthy as always. So in March 2023, the credit card issuances grew by 2.3% month-on-month and about nearly 16% on a YOY basis. Card issuance growth is the best in last 9 months. Average spends was at about 16,143 rupees, which is up 10.6% YOY and about 13% on a month-on-month basis. So average spends are the second highest that you are seeing post Diwali. Let's look at the top 4 performance. So performance for March, now with Citi's number being in the Axis details, a card market share for the top 4 has risen to 71.37% when compared to 68% in the previous month. Spends market share is at 74.74% for the month of March versus 71.9% on a month-on-month basis. Remember that Axis Bank's numbers now have Citi's numbers as well in March. So spends market share in spends is at 12% for Axis Bank versus 9% month-on-month, a gain of nearly about 300 basis points, while credit card issuances market share for Axis Bank now is at 14.2% versus 11.5% on a month-on-month basis, a gain of more than 270 basis points month-on-month. So in the top 4, due to Citi acquisition, Axis Bank has gained market share in spends by about 321 basis points. Ex-Citi, Axis Bank would have gained market share by 24 basis points. HDFC Bank has gained market share by almost 82 basis points to 27.4%. The top loser is ICICI Bank by about 189 basis points. Now the market share is 17.4%, and for SBI, the loss is is about 111 basis points, with market share being now at 17.9% on a YOY basis. So credit card issuances, SBI card has gained market share by 202 basis points YOY to about 19.65%. Axis Bank, due to Citi acquisition, has gained by 195 basis points to about 14.2%. ICICI Bank has seen a reduction of 175 basis points to about 16.95% now, and SDFC Bank has seen reduction of 190 basis points in the market share to about 20.56%. Top 4's market share in total cards has moved to about 71.06% that you had in March 2022 to right now about 71.4% in March 2023, a gain of 32 basis points, and that was largely for Axis Bank due to the Citi acquisition. Outlook on credit card issuances is that it remains strong in terms of, the credit card distribution on expected line. Spends have increased due to summer holidays. You need to watch out for the revolver rates, which are on a declining trend for the entire sector. Now, many private lenders are still going out with huge offers on credit card to their customers, so that needs to be seen how that will move ahead. Holiday season could keep the spends on the healthier side. You need to watch out for the inflation if that impacts on the spends of credit card, if any.
Interesting one, Abhishek. Thanks a lot for that. Well, on that note, though, we'll wrap up on this edition of Business Lunch, but you stay with us. Mid-Cap Radar comes up next.
Co-presented by Canara Bank.